retained profit brought forward. Okay, right. So let's take a look at the adjusting entries. Yeah. Okay. Right. So we are going to debit, since the depreciation is under provided, meaning you have to increase the group's depreciation. So you're going to debit the depreciation expense. Okay. Right. And this will go to the CPL, consolidated statement of profit or loss, as your expense for the year. All right, 4S, 4,000. Okay. And for the other year, which is 2015, right, you're going to debit that to the retained profit brought forward. Okay, and that is also of S. Okay, for the depreciation. Right, another 4,000. Okay, then we credit the accumulated depreciation for this machine. Okay, so cost for machine, that one will go to the statement of financial position. Okay, so that is your adjustment. All right, so you put that adjustment, okay, to the template that you have already done. All right, the template that you have done. Okay, and this machine should be under administrative expenses. Right, so you go up here, you have your selling, you have your distribution. So it doesn't fall under distribution, yeah. All right, if it's motor vehicle, it's okay to put under distribution, but not machines. So it fall under administrative. All right, so your adjustment would be, all right, to add to your administrative expenses. So you plus this, yeah? You add some more depreciation, okay, by 4,000. Right, so this is for depreciation that is under provided. Okay, so that is how you answer this question. Okay, all right. Then for this retained profit later on, yeah, when you go to the other statement, okay, when you go to the other statement, then you will incorporate this adjustment. Okay, so you leave this first. All right, then we go to info number. This is too much. It should be info number 3. Okay, we look at info number 3. Okay. All right. During the year, sweet sold goods, yeah, costing 80,000 to honey for 100,000. All right, which were invoiced 20% on the selling price. Okay. So in fact, in this question, there is no need for, if you have already said the goods were sold costing 80,000, okay, 400,000, from here we already know there is a profit. All right, total 20,000. Okay, so here they have given also, it was invoiced, but this one we have to change. If it is 25%, you will not get 20,000. So I've changed this to 20% on selling price. So in fact, the question doesn't need to give this statement. Tak perlu dia bagi ni sebab kita dah boleh dapatkan the total profit, 20,000. Alright. So if they don't give you these two figures, they can just say during the sweet sold goods 400,000, which were invoiced at 20% on selling price. So if you go by 20%, okay, on the selling price, all right, then you multiply by 100,000. Okay, you will get 20,000 as the profit. Okay, so please change this one. It should be 20. Now 1/4 of the goods remain unsold at the end of the year. Okay, so we have here, all right, sales that was made during the year. We have sales. Okay, and at the same time we have purchases. So these two are intercompany. All right. Another adjustment is for the unsold goods that was not made Okay, end of the year, 1/4. So if it's not yet sold, that means 1/4 of this profit is also not realized. Okay, so what is this? This transaction is going to affect the trading account. Now, so you go to your trading account. This is the one that you have already prepared. So you know that the turnover you are going to minus. All right, you're going to minus, not plus. All right, you're going to minus. Bukannya plus. Okay. So whatever sales that is which is inside the bubble, okay. Remember, if it is in the bubble, okay. So when I say in the bubble, you have the parent, honey, and you have subsidiary. So anything that is dalam bubble ni, okay, the sales, all right, the purchases, these are still within the bubble, okay, because it's already recorded inside the sales figure here. You have to cancel. Perlu ditolak, ya. Okay, same goes with the purchases because these purchases already recorded in the book of the buyer. So now you have to minus out the purchases. Okay, all right. Now there is an inventory in the book of the seller. Okay, sorry, in the book of the buyer here there is an inventory. So again, this goods is inside the bubble. So the profit on this goods, all right, will be unrealized. All right, so we need to do cancellation as well. Okay, so that is going to affect this. So the double entry would be, okay, to cancel the sales. You're going to debit the sales. Right? Okay, and this is the amount of the sales, 100,000. Okay, and you're going to credit the purchases. Okay, 100. Right? So you're going to go to the groups turnover here, and then you're going to minus. Okay, so that is your working. Okay, you minus 100. Then you go to your cost of sales. You do the same. All right, you do the same with the cost of sales. You're gonna minus, all right, your cost of sales, by 100,000. Okay, and for the unsold goods, all right, you're going to debit the unrealized profit on the inventory. Okay, and you're going to credit, all right, the inventory. You're going to reduce the inventory. Please go to the consolidated statement of financial position. Okay, all right. So how much is the amount that we need to reduce? So we know that the profit is 20,000. Okay, and 1/4 of that is not sold, so times by 1/4. Right, so that is 5,000. If you use this percentage, then it will be 20/100, okay, times 100 divided by 4. All right. So that adjustment will be in your cost of sale. So to your cost of sale, we are going to plus 5,000, okay, for unrealized profit. All right. Okay, so kalau dah ada template, it will be very easy. Okay, so this is why I suggest that in your exam nanti, awak sediakan satu template macam ni. Okay, then you proceed. Okay, then we move on to the next item, number 4. Sweet sold motor vehicles to Honey at the selling price of 60,000, and this vehicle was purchased 4 years ago at the cost of 90,000 with estimated life of 9 years. Okay, so you notice that, all right, we need to find out whether this motor vehicle was sold at a profit or at a loss. Okay, so we need to get the carrying amount. All right, so you're told that this vehicle was acquired at the cost, okay, 4 years ago. So you have to minus the accumulated depreciation. How do you calculate the depreciation for this asset? So you go to the policy, right? Okay, did it say anything about depreciation? None. All right, so it must be here. Okay, so this is on a straight line basis. All right, the useful life is 9 years. So we want to calculate the depreciation for the year because this is straight line. You take the cost, you divide by 9. So it's 10,000. Okay, and you have purchased it 4 years ago, so you times by 4. That will give you the accumulated depreciation. All right, so you take the cost 90,000, you minus the accumulated depreciation. and you times by 4 years. Okay, so 10,000. Okay, that will give you an accumulated depreciation of 40 years. All right, so what is the carrying amount of the asset? That will be 50. Okay, so that is the carrying amount. You compare that to the selling price. The selling price is higher. So there is a gain. All right, there is a gain on this disposal, on the acquisition of this asset. Right? So what do we do with the gain? It's not realized because the asset is still inside the bubble. All right, the vehicle is still in the bubble. Okay, so we have to take out the profit. So we are going to debit, okay, the unrealized profit on the sale of the vehicle. Okay, and this will go to the, when was the sale? The sale was made during the year. So we go to the consolidated statement of profit or loss of the seller. The seller is Sweet. Right? 10,000. Okay, and we credit the motor vehicle. That will go to the consolidated statement of financial position. Okay. Other than that, yeah, we need to calculate the depreciation. Now, in this case, okay, since the asset that is sold, the profit is not realized, that means the depreciation here is over provided. So we need to do adjustment, yeah, for depreciation that is over provided. All right, and how much is it over provided? So you just take the 10,000 and you divide by the remaining useful life. Okay, so estimated life is 9 years. You have already depreciated it 4 years, so the remaining useful life is 5 years. All right, so that will give you a depreciation that is overcharged by 2,000. Okay, per year, right? Per year. So how do you adjust this depreciation? It's over provided. You have to reduce the depreciation. So that is why when you reduce depreciation, you have to credit. Okay, credit the depreciation expense. All right, and you will debit the accumulated depreciation on this motor vehicle. Okay, so you must know, yeah, what is meant by depreciation over provided, what is meant by depreciation that is under provided. Okay, so this depreciation, okay, is under provided by, over provided by 2,000. Okay, so this will go to the consolidated statement of financial position. And as for the depreciation expense, okay, you must remember, yeah, for intercompany sale of vehicle, all right, as the asset is depreciated, you see, as the asset of the buyer, yeah, is depreciated, portion of this profit, yeah, becomes realized to the seller. So we are going to credit, all right, we're going to credit the statement of profit or loss of the seller. Bukannya buyer, yeah, it's not the buyer, even though we put here as depreciation, but through the depreciation, okay, the profit of the buyer will increase, right? So with that, okay, you go to your template here. Okay, so where are we going to charge the depreciation? Okay, the depreciation. So, well, in this case, okay, since they did not say whether the vehicle is under sales and distribution, it is also okay to put it under administrative expenses. All right. So with that, okay, we go to the adjustment, right? Okay, so you can see here. Okay, so you can see here. All right, we will reduce, yeah, the expenses. Okay, so if the depreciation for the vehicle is included under administrative expenses, all right, then you are going to reduce that expenses. Okay, you minus 2,000. Okay, for depreciation that is over provided. Okay, all right, and for the profit, okay, the unrealized profit on the sale of the asset, okay, which amount to 10,000. All right, that profit Yeah, there is no profit being shown here. It's definitely not under investment income. Okay, so I think that gain is not shown in the question. Sepatutnya ada ya. The person who sold the asset, the company that sell the asset would have recognized again. That means Sweet should have recognized again. So if we go back to the question, okay, we look at Sweet. Yes, Sweet did not recognize any gain. So where is the gain? That is the mistake of this question. Okay, so the gain should be somewhere recorded there, tapi tak ada ya. Okay, so sepatutnya ada. So in that case, it cannot be under administrative expenses. Silap, soalannya silap. Okay, so anyway, if it is not stated, okay, if it is not stated there, then what we do is we will have to add back, okay, the gain here. Alright, okay. So if it is not stated in the question, dalam soalan sepatutnya lah, okay, sepatutnya, okay, ditulis itu ada gain. Okay, on the disposal of the motor vehicle should be stated there, but it is not stated. So the gain would be included here in the administrative expenses. So if it is included in administrative, because it's the opposite of expenses, right? All right. If it is expenses, it would have been minus. Okay, so now we plus back. All right, so we plus back the unrealized profit on the sale of the motor vehicle, all right, not on the sale of the machine. It should be motor vehicle. Okay, so there is a mistake in the answer. Yeah, so you should plus back, all right. Soalannya ada silap sikit. Right, so that is the adjustment for these two. Okay, so now we go to number 5. Part of the investment income of Honey represent 4% of the ordinary dividend from Sweet for the year. So you go to the investment income here. Okay, it says sebahagian daripada, okay, income of the parent here, yeah, part of it is actually income that is received from the subsidiary company. So we have to minus. All right, so how many percent is that dividend? How many percent? Okay, so the total dividend paid by Sweet, you go back to the question. All right, this is the ordinary dividend. Okay, this is the ordinary dividend that is paid by Sweet. So let's calculate that. Okay, is it equal to this figure or not? Let's check, because ni dia dah sebut ordinary dividend paid. Let us check if it's actually 60,000. So we take 4%. All right, 0.04, yeah. Okay, and then you multiply by the ringgit value of the ordinary share capital of Sweet. Okay, Sweet comprise 1.5 million, yeah, so 1.5. All right, so 1.5 million times 4%, yes, that is equal to 60,000. Okay, so this figure is already recorded. All right, and the parent company has also recorded income. So how much is the parent share of this 60,000? So the holding share, okay, holdings interest is 80% of 60. All right, 68, that is 48. Okay, so that is the holding share. So this is intercompany. So remember, when it's interco, we need to do the cancellation. All right. So we go to the investment income. Okay, you go to the investment income and then you minus. All right, minus the amount that is received. Okay, so you minus, all right, the amount that is received. Okay, minus 48. Okay, all right. And as for the amount 60,000 here, okay, you see the 60,000 is taken out from the profit, yeah, from the profit. Okay, so this figure is also cancelled out. All right, so we take out the parent share and that leaves the NCI share. So the NCI portion of the dividend. Okay, what do we do with the NCI portion of the dividend? 20% of that. Okay, 20% of that will go to the NCI account. All right, it will debit the NCI. So we'll look at that later when we go to statement of changes in equity. So for now, we only look at the CPL first. Okay, and that is for ordinary. Okay, Sweet had declared and paid a dividend before end of the year. All right. Okay, number 6. Sweet appointed one of the director of Honey as a consultant who is responsible in giving advice on administrative matters. And Sweet recorded the annual fee of 8,000 under administrative expenses. So in this case, you have one entity receiving an income, another entity, all right, who is incurring an expense. So this is intercompany, so we need to do the cancellation. All right, so you will cancel. Okay, Sweet appointed the directors of Honey. So that means that in Sweet there will be an expense. So that you go to the administrative expenses, all right, and then you're going to take out, okay, the 8,000 from the expenses of Sweet. Okay, as for Honey, all right, there will be an income. So that income, okay, all right, from the in this case, actually, it should not have been under investment income, okay, because investment income would definitely falls under dividend. Again, this question has missed out something very important here, all right, which is the consultancy fee. Okay, consultancy fee. All right. So Sweet recorded the annual fee under admin, but what about Honey? Okay, so Honey tak ada record. So shouldn't fall under investment income. Okay, it should be under, cannot be under sales and distribution. So anyway, if it falls under this investment, let me see. Okay, they put it under investment income. Sebenarnya that is not the correct one. The reason is because soalan ni ada silap, ya. Okay, but anyway, all right, because this is intercompany, yeah, so we will minus, okay, the income that is, okay, let me just highlight the whole thing now. All right, so you can see under administrative, this is correct. Okay, we take out the 8,000 consultancy fee, okay, and then we should also take out the consultancy income, all right, that is received by the by Honey. Okay, so it's put here under investment. Sebenarnya is not the correct. It's not the correct answer. Okay, it should have its own income, which is other income. Okay, but anyway, just remember this. Yeah, I hope that soalan yang akan datang ni exam ni tak ada silap macam ni lah ya, which I did not look at just now. Okay, so it should be minus. Yeah, the income that is received, all right, will be minus. Yeah, because this is your income. Okay, so just remember that. Jangan dicampur ya. You have to tolak, cancel. So anything that is within the bubble, okay, within the bubble, which has been recognized dalam buku, any of the entity, okay, will now have to be deducted. Yeah, not to be added, but to be deducted. All right, you just remember that. Okay. Now, number 7, the goodwill on acquisition of Sweet is 30,000, but at the end of the year, we have an impairment of 20%. So you just take this 20%, you times by 30,000, and the impairment loss, you can recognize it as the income, expense for the year. All right, so you have here, okay, goodwill on impairment. Okay, all right, so that is the calculation, and then you will put the figure here. Okay, as a minus, all right, because this is an expense. Okay, number 8. Before the year end, Sweet declared a final dividend for its preference share, and this is a non-redeemable. So if you have declared it at the end of the year, it becomes your obligation. So you will have an ordinary, preference dividend payable, and also a preference dividend that is appropriated, all right, by the subsidiary. So how much is that? So you go to the question here. Okay, this is the dividend rate, all right, 7%, and you multiply by the amount here, which is 500,000. Okay, right. So you have a total preference dividend, which is 500 times 0.07 is 35,000. Okay, the total dividend is 35,000. Okay, but you can see here, all right, the subsidiary company already paid the interim. So this is the final. So the final dividend, okay, will be times or minus 17,500. You just total up, okay, the amount that's already paid. So the final dividend is the same figure, 17,500. Okay. So has the parent company recognized its share of the preference dividend? Has the parent company recognized? So in this case, of course, the parent company has only recognized, all right, the dividend that is for ordinary sahaja. Okay, investment income of honey represent ordinary dividend only. So that means that they have not recognized the income from the preference dividend. So how much is the holding share? How much is the holding share? Holding share, we already calculate here, is 40%. All right. So 40% of the total dividend, 35. All right. So 40% of 35, that would be 14,000. Okay. So this is the parent share which we will recognize. Okay. And after that, we have to do cancellation in the group account. Okay. So if we take a look at our investment income here, okay, you can see here we plus first, okay, the parent share, all right, and then we minus, okay, for the intercompany. Okay. But hold on, as I said just now, the parent company, Sweet had declared final dividend for its preference share. Okay. Part of the investment income represent 4% of the ordinary dividend from Sweet. Sweet had declared and paid the dividend during the year end. Okay, there's no mention about the preference dividend. Okay, so that means that the parent has not recognized, okay, its share. And so we should therefore, all right, not plus 7 but plus 14. Okay, so it should be plus 14 because they have not recognized, okay, the investment income, all right, for the preference dividend. So we plus 14,000, but after that, because this is intercompany, we minus. Okay, minus, all right, not 7. Okay. So in the consolidated statement of changes in equity, okay, you will see that the company, okay, we recognize a final dividend of 17,500. Okay, in statement changes. But because the holding have already recognized part of the share, the remaining balance, which is 60%, yeah, will be debited to the NCI, right? Okay, so that is the adjustment that required to be done. Okay, so now we look at our template here. So you have already filled in all the information, yeah? Okay, this 20,000, what is this 20,000? Oh yeah, the 20,000 is now represent the profit, yeah, from the sale of, what is this 20,000? Yes, 20. Okay, plus 20,000, that is the investment income. Okay, all right, 65 plus 20. What's this plus 20? Okay, this one is out. The 20 is this one here. All right, so that is the adjustment that you have already done. Okay, you have already done all this. Okay, the machine, the consultancy, the depreciation, and the unrealized profit. All right, so then you add up all. Okay, you add up all this. All right, to get the gross profit, the profit before tax, and the profit after tax. Okay, all right. Then once that is done, then you reconcile. Okay, so you start by taking the figure, okay, the total profit after tax, bring it down. All right, and then you calculate your NCI portion here. So NCI share in the profit after tax of suite. Okay, so do we need to adjust the profit after tax of suite? Yes, there are a few adjustments because suite has been making sales. All right, and there is also a revaluation of suite's machinery, okay, during that year. Okay, all right, so there are a few adjustments. Okay, adjustment for depreciation on machine, depreciation on motor vehicles, unrealized profit on that vehicles, and also on the inventories. Okay, so these are the adjustments to the profit of subsidiary. Okay, and after you have adjusted the profit, of course, you will minus, yeah, the preference dividend, yeah, from that profit, so that we can distribute the profit to the parent company. Okay, so these are the adjustment. All right, so just so that I don't confuse you, okay, I will, okay, ini jawapan daripada it is not wrong, but then it will confuse the student. Okay, let me just change this. All right, so we get the adjusted profit. Okay, then we minus the okay, this is the all right. Okay. Right, so this is the profit after tax, okay, and that profit is now adjusted, okay, for the following. All right, so profit of the year adjusted for this, okay, then you also minus the preference dividend, so you will get the adjusted profit, okay, for the shareholder. All right, adjusted profit for the ordinary shareholder, which is 517. Okay, 517. Right? Is it 517? No, not 517. Adjusted profit for the shareholder, which is 500. Okay, adjusted profit for ordinary shareholder, 500. Okay, let me just out this. All right, so you adjust all the profit, okay, and you must minus the preference dividend, yeah, so that you get the amount that is attributable to the ordinary shareholder. Then the ordinary shareholder have a 20% interest, yeah, in the profit after tax of this subsidiary. Okay, After that, then you calculate, okay, for the preference shareholder. Okay, preference shareholder profit is in the form of dividend, yeah, and they have 60% interest, right? 21. So you add these two figures, you will get 121. Okay, so once you get that figure, all right, you will put it, okay, and then for the parent, that will be the balancing figure. Okay, and then after that, you just transfer this figure. All right, you already prepared the template for the next statement. Yeah, you just transfer the figure to this statement. So you already have this line item profit for the year. Jadi awak transfer sajalah, okay, to this column. All right, transfer to that column. Okay. Now, as for the dividends, okay, you can start with the dividends after that. All right. So you remember, yeah, what is appropriated daripada group retained profit adalah dividend that is paid by the parent company only. So you go back to your question. Okay, you can see here the parent has appropriated ordinary dividend. So that is what we will appropriate, okay, from the retained profit of the group. Okay, only the ordinary. Preference, tak ada. Okay, then what about the 60,000 and the 17 and the 35,000? Okay, remember that the subsidiary already appropriate final dividend as well. All right, so what do we do with that? So that dividend, which is paid by the subsidiary, will not be taken out from the group profit, okay, because we do cancellation. The NCI portion will be transferred to the NCI account. So you will see, okay, that the NCI will be debited with their share of the ordinary share dividend from the subsidiary company. All right, which is 40% of 20% of 60. Yeah, 20% of 60, that's 12. As for the preference share, all right, the total preference is 35% times 60. All right, which is 21. Okay. So once you have already done that, okay, then you go back to your balance brought forward. How do you get the balance brought forward for the retained and also the NCI? All right, so let's take a look at the working here. Okay, so we have the NCI column. Okay, what is NCI value? Okay, from the date of acquisition of suite. To do that, we have to calculate the fair value net asset of suite on acquisition date, which is the share capital, the pre-profit, all right, and also the asset evaluation reserve. So let's go back to the question. Okay, the ordinary share capital of suite is 1.5. All right, the retained profit of suite. Okay, so we go back here, yeah. The retained profit of suite is 450. Okay, and there is a general reserve, so there's no share premium here, but general reserve. Okay, general reserve, all right, of 100. Okay, and also the asset revaluation reserve of suite is now, okay, here, which is 10,000, sorry, 20,000. So that is the fair value net asset of suite on acquisition date, and NCI share is 20%. So 414. Okay, and at the same time, you must also include NCI interest in the preference share capital of suite, because they have 60% interest in that preference share. Okay, the preference share is 500,000. Yeah, times by 60%, 300. Okay. So this figure will represent NCI value, okay, in the subsidiary on the date of acquisition. After the acquisition date, all right, the subsidiary made a post-profit. Then the subsidiary post-profit, okay, you multiply with NCI share, okay, NCI share. How to get the post-profit? So you take the retained profit brought forward, which is this one. All right, and you minus the pre-profit is now, which is 450. And then don't forget, yeah, that this machine, okay, this machinery, all right, was depreciated since 2015. So it's going to affect the retained profit brought forward, okay, of the subsidiary. You see here, debit the retained profit. So minus. All right. So we get a post profit of 513,350 times by NCI interest 20%. All right. And the remaining balance will go to the group. So that's how we get our NCI share. Okay. And for the parent company, okay, their retained profit brought forward, we plus with their share of the post profit from the subsidiary company. All right. So you get those figure and you just transfer them to your template. All right. So you complete your template. Okay. And you can now get the balance at the end of the year. Okay. So for the brought forward, you either do it using the schedule, combine all the reserve, or an NCI, or you can do a separate calculation like this. Yeah, it's really up to you. Right? If you find this easier, then you just show this as your working. Right? So that is for question 2, July 2017. Okay. So I hope this will help you, yeah, in answering this consolidated statement question. Okay, so we'll move on to, because I've already given this to you as your homework. All right, we'll move on to question number 4. Let's look at question number 4. Okay, I think I have discussed question number 3, correct? Have I done question number 3? Huh? Not yet. Oh, okay. I thought I have done question 3 with you guys. Okay. All right. Then let's look at question 3. Okay. Insert page. Okay, jadi hari ini kita buat doesn't want to move. Okay, then I have to do this one. Buat page break. Okay, then let's go to question number 3. Yeah. So we have already discussed. Okay, we have already revised, yeah, on the statement of profit or loss. Dah banyak juga soalan kita buat. Okay, so now we look back, yeah, at the preparation of the consolidated financial position. Okay, so question number 3. Okay, this is the information that we need. Yeah, the holding company acquire ordinary share capital of the subsidiary company. All right, 75%, 25% is for the NCI. The holding company also acquire the preference share capital of the subsidiary company, 20%, 80% to NCI. And the acquisition date is on 1st of January 2015. The financial year end is 2017. So this is acquisition in the previous year. So once you have already done this, right? Okay, because you need this information to refer to. Okay, once you have done this, okay, what's the next step? The next step is like what you do for CPL tadi. You can prepare a template. All right, a template for your consolidated statement of financial position. Okay, you prepare the template. All right. So you will have all these items put in. Yeah, you put in all these items. All right. Masukkan semua ni. Okay. So we start with land. Okay, land at cost. You put there land. Okay, and then you're going to combine, right, land of parent with land of the subsidiary company. So you just combine this. Okay, so you don't look at the adjustment first. All right, forget about the adjustment. Okay, you just combine. Okay, then you go to plant and machine. You do the same. Okay, prepare your template dahulu. Okay, because all this you will get marks. So make sure you get this correct. So sometimes the question we say hero is acquired, let's say 1st of September 2017. Walaupun dia 1st September, tapi for statement of financial position, because the assets liability is as at that date, jadi kita tetap combine the full amount. All right, do not time apportion. Jangan sekali-sekali. You only do that when it comes to the CPL. Okay, so you just combine. So as long as this is your subsidiary, okay, you just combine the whole figure. Right? So you go to the investment in subsidiary, okay, for both ordinary and preference share. This will not appear in your consolidated account. So you will just ignore this item, ya. Okay, ignore it. Maksudnya jangan letak di dalam statement of financial position. So instead you replace it with the goodwill here. You replacekan dengan goodwill. Okay, just leave it blank. All right. Then you go to your trade receivables. Trade receivable, you just plus. All right, you just plus. Okay, and then you go to current account. You just take the figure, just fill it up. Okay, you go to the current account. Yeah, you do the same. You go to inventory. You do the same. You just combine. Okay, bank. All right, bill receivable. Okay, ordinary dividend receivable. You just put in the figures first. Okay, tapi jangan letak di sini dulu. Just here. This is your working. Very important working. Okay, preference. Okay, you just put one line item here. Letak satu line item. Okay, one or two lah line items. Okay, just put blank lines. Okay, for any other adjustment. And then you move on to equity. Equity. Okay, it will be the share capital of the parent company only. All right, preference share capital also the same. Okay, preference share capital. If this is a non-redeemable, it will be part of the preference share. If it is redeemable, then it should fall under liability. Okay, so be careful with preference share capital. All right, so the parent will be included, but not the subsidiary. Okay, retained profit. All this you leave it blank lah, yeah, because you have to refer to your schedule. Okay, next line item, debenture. Debenture you add. Okay, all right, current account, just put it. Ordinary share dividend. Dividends payable. Okay, dividends payable ni. All right, you just add. Okay, you just add, it doesn't matter. Okay, trade payables, you also do the same. Your bills payable, your trade payable. All right, you just add these whole figures. Okay, forget about adjustment first. All right, so this is to ensure that yeah, you already have all these figures ready. Bila awak dah ada semua tu, confirm lah dah dapat markah untuk tambah ni. Dah ada markah dah ni. Okay, all those that needs you to combine dah ada markah. Okay, and also your format ni. Ni pun awak sudah ada markah. Bila awak letak, okay, format ni correctly, okay, at the correct arrangement, you also get marks for this. Right? So make sure this is correct. Okay, and the same goes with this, yeah. All right, goodwill jangan sekali-sekali letak sama dengan current asset. Goodwill is a non-current asset. Okay, make sure the goodwill is under non-current. All right, so template dah ready. Then you go into your additional information. Okay, so 1st July super acquired this. Okay, look at number 1 here. On 1st of January 15, the fair values of the land of Hero is 100,000 more than what is shown in the books. So what does that mean? That means fair value, okay, is more than the carrying amount, and that gives rise to a surplus. Okay, but since this is on acquisition date, this is going to be a pre. It's going to increase. All right, the fair value FVNA of the subsidiary company. And it says here that the subsidiary did not adjust the book to reflect this new value. Okay, all right. The land is still with Hero. Hero has recognized also another, there is another item here, brand, whose fair value is 15,000. So it is an internally generated asset to Hero. On business acquisition, this will become an intangible asset of the group. All right, and it will be recorded at this fair value, and there is no need for you to provide amortization. Okay, right? So you have this double entry. Okay, this is your double entry. I like to show the double entry so that it is easier for you to understand. When you look at the double entry, hopefully lah, some of you have very strong double entry. You will understand this very well. All right, so to record the increase in the asset, you will debit the land of Hero, the subsidiary, 100,000, and you will credit the revaluation reserve, which is a pre-reserve, and this will go to the FV&A of Hero. Okay. For the purpose of calculating goodwill. Okay. And the next item is the intangible asset. So the group is going to recognize an IA brand. Okay, and this will go to the statement of financial position at the figure of 15,000. Then you credit the revaluation reserve pre. So this will go to the FV&A of H as well. Okay. Right. So with that, we go to this land. So you can see that the value of the land for the group has increased. So that means you go to the asset land here, okay, and then you plus, right? You plus the 100,000. And then you go to brand. There is your intangible asset brand. Okay. So you're going to recognize, all right, a group asset. And since there's no amortization on that, then you can just put the figure right at the end. Okay, 15,000. Okay. Right. Then we go to number 2. Number 2 is on the sale of plant and machines. So again, you have looked at the adjustment for the sale of depreciable assets. So it's going to be the same. It's going to repeat. You're going to look at the same thing. And this happened not on the date of the acquisition, but in the current year. Okay, this is in the current year. All right, let's go back to question number 3. Okay, so this is in the current year, 2016. No, it's not in the current year. Acquisitions 2017 is 2016. This is still in the previous year. Your financial year is 2017. So this is your sale in the previous year. All right, and Super sold it to Hero. Okay, for 30,000. So the selling price 30,000. All right, but it's sold at the carrying amount. So the carrying amount is 40 minus 20, which is 20,000. That gives rise to a profit or gain on disposal, which is 10,000. Okay, and this gain is recorded by the seller here, Super. Okay. Super is the parent company. Right? So this profit is already recorded. Okay, it's already in this retained profit. But now, since the asset is still with the buyer, right, so we have to debit the unrealized profit, okay, on the plant machine. All right, and this will go to the group retained profit, and it is the profit of S. We're going to cancel it out, take it out, debit it, okay, and then we will credit the plant machine. Okay, and this will go to the consolidated statement of financial position. All right. The next one is depreciation. In this case, then if we don't recognize the profit, that means the depreciation is over provided. All right, over provided by how much? 10,000. Okay. Remaining useful life is 5 years. You divide by 5. Okay, so 5, that's 2,000 per year. Okay. So depreciation is over provided 2,000 per year. Okay, but since which year? So we have an accumulated depreciation, which is 2,000 Okay, times by how many years? So 2016 and now it's 2017 times 2 years. So 4,000. Right? So the total amount that is to be adjusted, okay, to the retained profit is 4,000. For the current year is 2,000. For 2016 was 2,000. So all in all is 4,000. All right, double entry. If depreciation is over provided, we're going to reduce it. So we credit depreciation expense. Okay, so this depreciation expense, all right, is recorded, okay, in the group retained profit, okay, of super. Okay, so remember, yeah, as the asset is depreciated, portion of this profit will become realized to the seller, okay, which is 4,000. Okay, and at the same time, we will add back, okay, the carrying amount of the asset. Okay, so we debit the accumulated depreciation, 4,000. Okay, so if we are preparing the statement of financial position, we don't have to bother about brought forward and profit for the year. All right. When you are preparing the statement of profit or loss, then you will have to be more concerned, yeah, because only the expense that is incurred during the current year will go to the statement of profit or loss. All right. If it's incurred in the previous year, it will affect the brought forward retained profit. Okay. Right. So we go to the statement of financial position here. Okay, we go to statement of financial position. All right. Okay, the first one, we are going to credit the plant and machine. So you go to plant and machine. Okay, you go to the plant and machine, and then you are going to minus. All right, minus 10 here. Okay, minus 10. Okay, and then you go down to this. Okay, you see here, the accumulated depreciation means the carrying amount of your plant and machine will increase. Yeah, because the depreciation is reduced. So you plus. All right, plus 4. Okay, plus 4. The accumulated depreciation. Okay. So adjustment to the plant and machine also require adjustment to retained profit, right? As you can see here, retained profit. This is also retained profit. So retained profit is under equity here. So what happened to this retained profit? You don't show the working here, so you show it in the schedule. So you have to prepare the schedule. All right, but this time the schedule we are preparing is for the year end. All right, it's for the year end, the carry forward. This is for the carry forward. Okay, end of the year. All right, but the calculation is the same as in question number 2 that we discussed earlier on. All right, working is the same, just that one is for brought forward, one is for this time is for the year end. Okay, so we start with the profit of super. So you have this template. Okay, so you have super here, which is the parent company. All right, so you have the retained profit of the parent end of the year, which is 100,000 here. Go back to your question. All right, the retained profit of the parent here is debited minus 10. Right. Okay, and then the retained profit of the parent is credited plus. So you plus 4, yeah, with the depreciation. Okay, so as the depreciation is provided, portion of the profit, okay, become realized. That's why we plus back to the retained profit. All right. Okay. Then we go to number 3. Number 3. Okay. During the year, this time is the current year, yeah, 2017. Hero sold inventories valued at 30,000 to super. Okay, Hero invoiced the inventories to super at cost plus. Okay, in this case, yeah, All right, their sold inventories valued at 30. This is the sales and also the purchases. Okay, so if you are doing the statement of, if you are doing the CPL, all right, for the purpose of preparing the CPL, then you will be concerned about eliminating the sales and the purchases, right? You will be debiting sales, okay, 30,000, and then you will be crediting the cost of sales, 30,000. All right, this is if you are doing question number 1 and question number 2 CPL. Okay, but for statement of financial position, okay, there's no sales and purchases. So we ignore this transaction, yeah, when it comes to the statement of financial position. We don't need this. What we need is, okay, what we need will be this one, the unrealized profit. So we look at year end. At the end of the year, Super had not sold any of the inventory. So that means, okay, all the profit is not realized. Right? So how much is the unrealized profit? So here it says Hero invoiced the inventories at cost plus 50%. Okay, at cost plus 50%. So it will be 50. Okay, this is already the selling price. So cost is 100%, means selling price is 150. So 50 over 150 times by the value of 30,000. Since it says all these goods that was bought was not sold out by end of the year. So this value 30,000. Okay. So that gives you an unrealized profit of 50 divided 150 times 30. That's 10,000. Okay, 10,000. So we are only interested in this one. All right, how it affects the statement of profit or loss. So we're going to debit the unrealized profit on the sale of the inventory. Okay, and that will go to the group retained profit, okay, of the seller H. Right, and then we will credit the inventory. Okay, so we go down here. So you have the inventory here, which you've already added. And now we put in the adjustment. Okay. All right, put in the adjustment. Yeah, you are going to credit the inventory 10, so you minus 10. Okay. And then you go to the retained profit. All right, we go to retained profit of Hero. So you go to your template. Okay, you go to Hero. All right, the retained profit is going to be reduced. Okay, with the unrealized profit of 10,000. Okay. Right. So we only concerned about this two. Okay, this one, when it comes to CPL, then you will make adjustment to the trading account portion of the statement. Right? Okay, we go to number 4. Right, let's look at number 4. Okay, in July 2017, this is during the year. Okay, Super sold a piece of land, 50,000 to Hero for 80,000, and Hero does not intend to sell this land. Okay, what does that mean? Hero does not intend to sell the land. Means the land is going to be used for business. This is a PPE then. All right, so this land is a PPE. So therefore, the profit that is made, yeah, by Super here is not realized, yeah, because the asset is still inside the bubble. So we're going to cancel. We're going to debit the unrealized profit on the land, and that will go to the group retained profit of the seller Super. Okay. And the profit is 80 minus, that's 30,000. And we are going to credit the land. Okay. Credit the land. So we go to the land, right? And we're going to plus, sorry, minus. All right. So we minus the land, credit the land. Okay. And we go to the retained profit, the schedule. Okay. Super. All right. You can see here minus, minus 30. Okay, from the retained profit. Right. Number 5. Again, in the current year, Super has not yet credited its bank account for 1,000 cash that is received from Hero. Okay, remember just now in the question, okay, there was a current account. Okay, there was a current account. Okay, there is a current account. All right. Okay, and the amount is 12,000. Okay, so this is in the book of the parent, and then in the book of the subsidiary, there is another current account. Okay, 11,000. So you see there is a difference of 1,000. All right, meaning this entity, okay, this entity, Hero has already paid 1,000 to the parent company, but the parent has not received. So there is a cash in transit. Okay, Super has not credited the bank account from the cash, okay, received from Hero. So we're going to do cancellation. We're going to debit, okay, the current account. All right, the liability we're going to cancel, so 11,000. And we're going to record the cash in transit. 1. And we're going to credit. All right, the other current account of 12,000. Okay, so these two current account is cancelled, and we just recognize this item in transit. Okay, so it has no effect to the retained profit. Yeah? So the schedule is not affected. What is affected is one liability and one asset. All right, so you go to the statement of financial position, the asset will be minus. Okay, so we minus. So the figure here, there should not be any more figure here. Okay, tak ada figure. All right, do not have a figure here. It must be 0. Then you go to the bank. Bank, there will be a item in transit. All right, you plus 1. Then you go down to the liability. Okay, another current account here is also cancelled. All right, so this one shouldn't have any balance. Okay, it should be 0, nil. Okay. If you have a balance here, your answer will be penalized. Maka awak akan dipotong. Yeah, in the final exam, you have a figure here for intercompany balances, yeah, like current accounts or loan. Then you will be penalized. All right, with your marks. Yeah. All right, number 6. Trade receivables of Super. Trade receivable of Super is included 10,000 for the amount due from Hero, and this includes amount due for inventory 3,000 that is sent by Hero Super to Hero on the 31st of December, all received after the reporting date. So what we have here, okay, is that the trade receivable, the asset of Super here, okay, they are supposed to receive. All right. No. This is something to do with inventory, not cash. So we have to be careful here. Yeah, this is inventory. So what happened is Super sold goods to Hero on credit. On credit. All right, on credit. So that's why Super recognized a debtor account. Debit the debtor and credit sales to Hero. Okay, and Hero would be recognizing a trade payable. So it will credit a payable and debit purchases. All right. Okay, the trade receivable of Super include inventory that was sent to Super, sent to Hero, not yet received by Hero. So that means that the accounts payable of Hero will not include this figure. So there is a goods in transit. All right. So how much that we need to cancel? Okay, because this is intercompany, we have to credit our asset trade receivable. Right, we will cancel the trade receivable 10,000. Okay, and we will debit our trade payables. Okay, but the trade payables here will not be equal to 10,000 because, like I said, okay, it should be less since they haven't received, okay, the purchases from this buyer, from this seller. So this one should be 7,000 only. So the difference is debited to goods in transit. Right? And this item in transit must be recorded by the parent company. Okay, when they prepare the consolidated statements, 3,000. Right, so we go back here, then we go to our trade receivable. We are going to we're going to minus 10 on the trade receivable. You can see here minus 10. And then we go to our goods in transit, which is our inventory. So we can have a separate item, goods in transit, cash in transit, or if it is bank, you can add cash in transit. If it is goods in transit, you can add to your inventory. So you will see that your inventory will increase plus 3. Okay, because of the goods in transit. All right. So here minus 10. Okay, because we don't recognize the receivable, all right, between parent and subsidiary, but the goods in transit have to be added back to the inventory, all right, and then you go to your trade payables, all right. What happened to your trade payable? We take out what is amount due with the other entity, so we minus 7. All right. Okay. So minus 7, your asset side, there is also a minus 7 net, a net amount, okay, minus 7. Negative 10, positive 3 is net 7. So here, reduced by 7, here also reduced by 7, all right? So that is your correct accounting treatment, okay? Let's go to this. Provision is to be made for a half-year debenture interest for both companies. Okay, go back to your question. All right, you can see here there is a debenture. Okay, debenture 10,000. Sorry, debenture 10. Okay, and for the subsidiary debenture is 20, and they both have the same amount of interest. Okay, 10%. All right, and both parties have not provided for the half year, only half year, yeah, not full year, half year. Okay, so that is your accrual. Okay, so you have to recognize your accrued interest expense. How do you do that? All right, how do you do that? Okay, you will okay. So let's start with the parent first, Super. Okay, the parent company. Okay, Super. All right, we recognize an interest. So how do you recognize interest expense? You debit your interest expense and you credit your accrued debenture interest. Or over here we use debenture interest payable. It means the same thing, all right? Debenture interest payable or accrued interest. Okay, so you will credit your debenture interest payable, and this interest payable will go to the consolidated financial position, and this interest expense will go to the group. That will be charged to the group retained profit of super. Okay, now we do the calculation. How much is the interest? So it says half. Interest rate is 10%. Okay, super's debenture is 50,000 times 50, right? So that will give you 50 times 1 divided by 2. That's 2.5. Right, 2,500. Okay, now we take a look at the other party. Okay, hero. The same case, okay, hero will recognize the interest expense, and that will go to the retained profit of hero. Okay. And then you will credit the debenture interest payable. That will go to the consolidated financial position. All right, and the interest is half of 10% multiplied by the nominal value of the debenture, 20,000. Okay, so that will be equal to 10% of 20 divided by 2, that's 1,000. Okay, so hero will recognize a debenture interest, okay, of 1,000. Right? Okay, so always go back to your first step tadi. Okay, what was the first step? All right, which is to calculate the percentage. Okay, so you can see that both the holding company did not invest in the debenture. So that means our work here, our job here is very simple. We just recognize the interest expense due. Okay, so we go to the debenture interest payable. We go to this statement. All right, under liability, we have debenture interest payable. Okay, of the parent and the subsidiary company. Okay, and then we go to the retained earnings, and this is where we need to refer to the schedule. Okay, so we look at super. There is a debit to the retained profit of super. Debit. See here, minus. Okay, and then we go to hero. Okay, for hero, there is also a minus. Okay, for its debenture interest of 1,000. Okay, and there is an additional debenture interest of 1,000. Right? So that is the adjustment. You need to do this because the two parties have not done the recording of the interest in its book. Okay? So the group's assets, the group's liability has to be adjusted. Okay, the next one is the bills. This is on the bills. Okay, and if you remember, okay, when it comes to the adjustment for bills, right, we only cancel the undiscounted bills. Okay, you only go for the cancellation of undiscounted bills. So here it says the bills payable of hero 10,000 were drawn in favor of super. So that means, right, if hero, all right, is the one owing, that means for super there is a bills receivable. Okay, so here it says that super had discounted 8,000 of these bills. All right, super already discounted 8,000 of the bills. So how much is the undiscounted portion? It will be 10,000 minus 8,000, right? And this will give you a 2,000 difference. Okay, so this is the bill that we need to cancel. All right, so I don't need to show the double entry. How do you cancel? How do you take out the bills payable? So you go to the bills payable here. All right, the group's bill, you just minus 2. Okay, and then you go to the bills receivable of the group. You do the same. You also minus 2. Okay, so dia tak semestinya affect the profit. Ya, bukan semua transaction ni will affect the profit. Alright, some of it will affect only asset and liability. Okay, and number 9. Alright, during the year, Super declared a bonus issue of 1 share for every 7 shares held. Okay, be careful with this because dalam soalan exam, alright, the bonus issue can be by the parent, can be by the subsidiary. Now, in this case, the bonus issue is by the parent company. So there is no pre and post reserve here being used here. Alright, it's only the subsidiary will have a pre and post. If it is the parent, okay, then you don't have to worry about pre and post. Okay, but the double entry is still the same. Okay, we're going to recognize a new issue of share, and then we're going to recognize a reserve here being used here for the bonus issue. So in this case, it's going to be the retained profit. All right, the retained profit. Okay, so our double entry will be to debit the retained profit. Okay, to debit the retained profit of Super. Okay, and to credit the ordinary share capital of Super. Right, with the bonus issue. So it says 1 for, it says the figure here is 1 for every 7, all right, of the shares held, okay, by the shareholders in Super. So you go to the additional info number 1, all right. It says here that Super, okay, wait, not number 1 here. Okay, so you can see here the share capital of Super is 350. This is the share capital in issue. All right, and each share is valued at the issue price of 1 ringgit. All right, so they have 350,000 units here of the share capital. So to get the number of bonus issue, times by 350. Okay. And the value of that bonus issue is, it says 1 ringgit. So times 1. Right. So the bonus issue is 350 divided 7. Okay, that's 50,000. Okay. Right. So we go to the equity, okay, because we're dealing with ordinary share capital, so equity. So the ordinary share capital of Super, which is supposed to appear in the group account, right, is going to increase by 50,000. So we go here. Okay, we add, all right, another 50,000 to the 350. Okay, so the share capital of to be shown here in the consolidated account, all right, will be 400. Okay, not 350, but 400 as a result of the bonus issue. Okay, then we go to another item, that's the retained profit. The retained profit here will be debited, reduced. So we go to the schedule. Okay, Super bonus issue 50,000. Okay, the retained profit is debited minus. All right. So if it is hero, then you will adjust the retained profit of hero. All right, you will adjust the retained profit of hero. Okay, if it is super, it's retained profit super. Right, hero will be hero. Okay, and at the same time, yeah, when it comes to the goodwill calculation, okay, you will have to adjust, okay, the retained profit and the share capital if the pre-profit is utilized for the bonus issue. Right? Okay. We're almost coming to the end. Right? Almost coming to the end here. Dividends payable of hero include the second half reference dividend, dividends payable. So if you go to the question, right? Okay, to the question. Okay, you can see this dividends payable here. It says included in this dividend payable is actually preference dividend, okay, by hero. Okay, so included in here is the preference. So we have to split. So if you look at my solution here, the solution here, okay, you will see that the dividends are already split into ordinary as well as preference. Okay, not of the parent, but only of the subsidiary here. You can see here, okay, initially the figure is, okay, look at the figure here, it's 15,300, right? Okay, but we have to take out the amount for preference dividend. And how much is for the preference dividend? Okay, so dividend preference here is 100, and this is 5%. So 5% of 100,000. 5% of 100,000. Okay, 5% of 100,000 represents the preference dividend. Okay, 5. But it is not the full year, it's for the second half. So times by 6 over 12 divide. That's 2,005. Okay, so we have to take out, right, the second half preference dividend. Okay, the second half preference dividend. So you can see here, all right, your dividend was 15, again, yeah, in case you forget, was 15,003. Okay, you minus that 2.5 tadi, you will get preference, ordinary dividend paid by the subsidiary only, which is 12.8. Okay, so the 2.5, you put it under a separate item, preference dividend from the subsidiary. Okay, all right. And it says that during the year, Super had declared and recorded dividend to the shareholders. However, no record was made by Super for the 6% non-preference dividend. Okay, so how much is the 6% preference dividend? This one, this now was by Hero. Okay, this is by the subsidiary. Okay, now we look at the parent. Okay. So the parent's dividend is not the same, yeah? It's not 5%, but 6%. All right, and the nominal value of its preference share is 100. Right, 100. Yes, 100. Right, and no record was made by Super for the 6%. That means the full amount is not yet recorded. So 6,000. That was not recorded. So these are the payables you have to incur because you have declared it yeah, during the year. So it becomes a liability. So that means you will recognize a preference dividend payable. All right, and then you will recognize an appropriation of that from the retained profit. So let's take a look. Reference, okay, all right. So you'll see there is a reference dividend table, all right, by the parent company, okay, of P. Okay, all right. And then the preference dividend by the holding companies, by the subsidiary company, Hero. Right? We need to cancel the amount that is to the parent company. So how much is the parent share of that dividend? Okay. So the parent share is how many percent? Parent share of the preference is 20%. All right. Okay. So here is the parent share. Okay, you minus. Right, 0.5. Okay, so we cancel out the dividend. Okay, to the parent. Okay. So we have to super 2.5. Okay, 0.5. This needs to be cancelled. Okay, so we do the cancellation. We recognize first, all right, dividends. Okay, right, we recognize first the dividend, but after that we do the cancellation. So that's why you don't see any preference dividend receivable. Okay, right, because that receivable account is already cancelled. So what remains in the payable account is only the amount that is paid to the non-controlling interest. Okay. All right, and the last one is on the impairment. The impairment of goodwill amounts to 10%. So before we can calculate the impairment loss, yeah, we need to calculate the goodwill. So we have done all the adjustment, yeah, needed. Okay, so the last one is to calculate the goodwill for the group. Okay, to calculate the retained earnings and the NCI. All right, so you go to calculation of goodwill. Okay, so let's look at the goodwill calculation. All right, goodwill for Hero. Okay, ordinary share. Remember, we have two investments, so we calculate for ordinary share first. Yeah, for the ordinary share, consideration is 250. Okay, which you can find in the question here. All right, 250. Plus with the NCI, and the NCI is calculated. Yeah, it says the NCI is calculated based on the proportionate share, the fair value. Okay, so which is 25%. Right, which is 25%. Now, if you look at question number 4, let's look at what it says about the NCI. It says that non-controlling interest was not measured at fair value. They can use these terms. Okay, and when they say not measured at fair value, it means proportionate. All right, okay, proportionate. Right. So of the net asset. So FVNA of the subsidiary is the share capital. All right, and then you have a loss, a loss. So you go back to the additional info regarding the acquisition here. Okay. Retained profit of Hero had a debit balance. When you say debit balance, remember, that your retained earning here is a loss, so accumulated loss, minus plus your revaluation reserve for brand and land. So there is a goodwill here, okay, for ordinary share. What about the preference share? For the preference share, all right, will be the consideration plus also the NCI who have a share 80%, and the FVNA is only the preference share capital. All this residual asset, the reserves, doesn't go to preference share. All right, all goes to the ordinary share. They have the residual asset. So for preference share, for debenture, it's only based on its nominal value. Okay, and nominal value of preference share is here, 100. Okay, for the subsidiary. Okay, so we have a goodwill, all right, because your A here is more than the B. There is a goodwill from preference share capital. What's the total goodwill? So when you have goodwill from all your investment, you just add them together. All right, 28.7 plus 10 is 38.75. The impairment loss will be based on this. Because soalan tidak menyebut, okay, impairment loss daripada which investment dia tak sebut. So that means we just take the whole goodwill, all right, and impair them, okay, based on the rate given, all right, which is 3.87. So your goodwill remaining is 34.87. So you bring that figure to your goodwill consolidated here. Okay. And what about the impairment loss? It will affect the group profit. So you go to your schedule, right, and you minus the impairment loss. Okay. You minus the impairment loss, right? Okay. Okay. So with that, you can now prepare your finalize the schedule here for the retained profit and NCI. Okay, let's take a look. All right, so your NCI, we begin with the NCI value at acquisition date. Okay, NCI value at acquisition date for both ordinary and preference share. Okay, so you just transfer figure. You transfer the here, and this one here, you just transfer to this column. All right. Okay, then we look at the retained earnings. We start with the subsidiary. Okay, retained earning of the subsidiary. Just remember, end of the year. So we take year end. So we go to the statement here. Okay, we will look at the retained earnings here at the end of the year, which is 70. All right. Minus the pre-loss. If it is a loss, you plus. Okay, remember, you have to get the post profit, right? So you retain profit end of the year plus with the accumulated loss. Okay, so you have a post profit of 90,000. Okay, but the post profit is adjusted for the following items. Okay, unrealized profit on inventory and debenture interest. So that is the post profit. Okay, till end of the year. So allocate that to parent and NCI. Okay. So for the NCI, all right, you add all this together, total figure. For the parent, you add it with the parent's own reserve, which is adjusted for all these items, including the preference dividend that we discussed earlier on. Right? Okay. This is the appropriated preference dividend. This is the dividend income from subsidiary, which has not been provided. Right? So we add all that. Yeah. So we complete our consolidated statement. Okay. So once you have done that, then you get the whole figure, the last column. What the last column? Okay. Then you add. Okay. Right. to me, okay, if you follow these steps, I think it will be safer, okay, because you already have the template ready. You already fill up all these figures, and these figures semuanya ada markah. Alright, make sure format ni betul. Ni pun ada markah. You put the goodwill at the correct place, you get one tick, even though the figure here may be wrong. Alright, because we don't look at your figures. Yeah, we look at here. Okay. Alright. Kita akan bagi markah di sini. Okay, kalau awak letak NCI at the correct place, you get ticks for this whole format here. You get one bonus marks already. Right? And make sure you show all your workings like this. Okay, these are workings. Yeah, it has to be included in your answer. Right? Okay, without these workings, you will not get any marks, yeah, because we don't know how you get the figure. Okay, so make sure you have your workings. Okay, so we look at our, okay, and this statement very important also because all the ticks, yeah. That's why bila comes to this portion, kita tak tengok figure ni, kita tengok your disclosure. Okay, how you disclose it. Alright, the ticks for the figures will be in the schedule here. Okay. So, question number 4. The last question is similar to question number 3. Okay, look at the question number 3. The only thing is I need you to amend. Right, for question number 4, yeah, please amend this. This figure is okay, except here, this part. This part, yeah, number 9. Look at number 9. Alright, boleh tak you ubah ni sikit? Okay, you change. Wait, this is okay, number 4, dragon. Okay, go to figure number 9, go to item number 9. Okay, you change the one in red. Okay, there is no share premium. Okay, there's no share premium. All right, we only use the retained profit. Okay, so change share premium to retained profit. Tu je. All right, class. So we are done with consolidation. I think we have done a lot. So what I'll do is I give you the solution for question number 4. Okay, for your revision nanti lah ya. I will give you the solution for this. Right? Yes. Then you, if you have already done your work, then you just check your answers. Okay. Right. Now, untuk your own revision, kan saya dah bagi awak satu soalan. Okay, there was one question that I gave here. This sub-exam. Alright, sub-exam ni. Okay, what you do is, wait, not this one. Okay, the sub-exam question. You can do this for your revision as well. Right. Sub-exam. Final. Okay, so I've given you this question. All right, you can go through this. See, like question number 1. Okay, this is the final exam. So many questions that you can try. Yeah. Okay, you try this. This one you boleh buat ya as your revision for intangible assets. All right, you try it out. Okay. If you have any question, you can ask me. Yeah. So basically, intangible assets. Remember, yeah, they will ask you on theory question, yeah, criteria, recognition, and so on. Okay. Right, and the rest will be they will test you on all the various intangible items. Okay, so you just have to remember, yeah, intangible item ni, you start with the recognition. How do you recognize? How do you recognize if it is an intangible asset? Yeah, for it to be an asset. Okay, and how would you measure it? On the date you first acquire, okay, you recognize it at the cost. All right, so make sure it is an acquired intangible. All right, if it is not an acquired intangible, you have to write it off. Okay, and then you look at the useful life. Kalau the useful life is finite, you must make sure you provide amortization. Okay, right? Okay, and they can ask you about impairment. They can ask you about revaluation. Okay, revaluation of your intangible assets. Okay, then they can ask you basically about another intangible item, which is the research and development. Okay, and for R&D, okay, please remember the question that they ask for R&D is always the R&D that is developed by the entity itself. Okay, and this kind of R&D, which is internally generated, is to be recognized as research and development. Kalau research, you must make sure it's written off. Development, that depends. Alright, development is only written off if it doesn't meet the capitalization criteria. Okay, and when do you stop this capitalization? Okay, when there is a commercial production. Bila commercial production begin, you have to end your capitalization. All right, and after that, you need to provide amortization if the product that is produced, yeah, from your R&D has a finite life. Okay, so these are the kind of thing that they can ask, yeah, on our intangible item. Okay, so you can, you know, try out this one. And then question number 3, this is just like your project number 1. Okay, so you need to reread lah, yeah, what is your PPE. Okay, compare and contrast between PPE, intangible asset, inventories, okay, IP, and also biological asset. Okay, the questions somehow is not too tough, okay, because they just give you a scenario, all right, or a situation, all right, and the situation is normally not that difficult. Sometimes they choose just a particular item, like for example, depreciation. How do you account for depreciation if this machine is used as a PPE or if this machine is used in research and development? Okay, and they can ask you very simple question like that, and then you compare the accounting treatment. Okay, question number 4. This question actually know how to master this question. This is one of the questions that you can score. All right, and the marks is 17. Okay, so you know there are certain things that you can really focus on, you know, and make sure that you do the best. That means you can score that particular question. Yang awak boleh score, I think, is question number 4. And we have done a lot of questions, okay, but different formats. So what you do is you go back and you try it out again. Okay, buat sekali lagi, jangan tengok jawapan. Buat soalan yang berbeza-beza. Okay, because the tutorial I gave you, they have different format. Okay, so you study those and you try out this question number 4, right? Okay, this one kita dah buat lah, yeah. So you only have that 4 questions, yeah, to do as your revision. Okay, so I will not give you the solution that soon. All right, you must try it first. Okay, maybe I will give you the solution by next week. Okay, so at least give you time to try it out first, you know, until you can check the answer. Okay, so do you have any question to ask regarding this tutorial, or other than the tutorial, anything? Soalan? No? Okay. Nobody have questions. So Ya, kalau macam tu kita we stop lah ya. Okay, because I'm gonna have